Hello everyone, this is Tejas from Trendline, and in this video we'll be talking about India's leading car manufacturer and familiar name, Maruti Suzuki India. Let's start by discussing the car maker's long and short-term price changes. Then we will analyze its strong Q3 FY23 results, which could help the company's share price to continue its newfound momentum. The company's Q3 FY23 results have surprised both analysts and investors positively as its share price rose over 3% in response. A major reason for this was that Maruti Suzuki India or MSIL's revenue and net profit beat forecasted estimates comfortably. In addition, the management said the company is ready to launch its first electric vehicle in FY24, a full year ahead of schedule. At the Auto Expo 2023 held on January 12th, MSIL laid out its plans to launch two new SUVs in the next 4 months and discuss its strategy for the EV segment. We'll also check in on the street view on MSIL post its Q3 results, and then we'll finish with a valuation check on the share price using different metrics to see if the stock is overvalued or undervalued. The automobile industry is a cyclical one. This means an economic boom usually helps drive sales in the automobile industry, and while sales tend to suffer during economic downturns. This was clearly visible in February and March of 2020 when the Nifty auto fell over 45% in 2 months as the economy took a downturn. Post that, all three companies, Maruti Suzuki, Mahindra and Mahindra, and Tata Motors, managed to recover. But Mahindra and Mahindra has outperformed both Tata Motors and Maruti Suzuki India by a huge margin with its strategy shift and entry into the electric vehicle segment. MSIL share price has fallen over 5% over the past 5 years, while M&M's share price rose nearly 75% during the same period. The question is whether MSIL can shift its gears and accelerate on the back of strong Q3 results and focus in the high demand SUV segment. MSIL has strong competition in both passenger vehicles and electric vehicle segments, where Tata Motors and M&M have moved early and positioned themselves well. Tata Motors has also posted strong Q3 results, while M&M's results are awaited on February 10th. M&M's share price is trading near its all-time high in anticipation of good results. Despite the share price rise, it is trading in the PE buy zone with MSIL. This means that these two companies' TTM PE ratios are trading below their historical levels. Let's get into MSIL's Q3 results, which were released on January 24th. Its share price has risen over 3% in reaction as revenue and net profit both beat forecasted estimates. While revenue beat estimates by 5%, net profit overtook estimates by over 25%. Net profit jumped 2.3 times due to higher average selling price as the company took price hikes, and commodity prices also eased in Q3, leading to lower raw material expenses. As a result, the operating profit margin rose sharply year on year and has been on an uptrend for the past 2 quarters. While the company offered more discounts, it was offset by forex gains, which the management said was reflected in this quarter. However, management guided possible forex losses in Japanese currency due to fluctuations that could be reflected in the next quarter. Surprisingly, volume sold increased 8% year-on-year in Q3 despite a higher average selling price. This was due to a slight product mix shift and also higher discounts. According to the latest data, Maruti Suzuki's January total wholesales rose 12% year-on-year nearly 1.73 lakh units, led by 14.3% growth in domestic passenger vehicle sales. The utility vehicle and mini subsegments continue to grow at a fast rate compared to others. Utility vehicles wholesales rose over 30% year on year to around 35,000 units. Let's now get into the strategic overview of the company, starting with the product-wise revenue mix. The compact segment, which includes Desire Tour, is a major revenue contributor for MSIL. However, the management has set its focus on SUVs, which is now the fastest growing segment in India. In fact, the management said that its forecast for the SUV segment growth in India underestimated the speed of its growth. To get ahead of the competition, the company is completely focusing on SUV offerings now. On January 13th, it unveiled two new sub 4 meter SUVs, Fronx and Jimny, at the Auto Expo 2023. Fronx is expected to cost around 8 lakh rupees and will be launched in India by March April this year. And Jimny is expected to be priced around 10 to 12.5 lakh rupees and will go on sale by May. With the help of these SUVs, the management aims to grab 4 percentage points in the passenger vehicle market share and become the market leader in the SUV segment by FY24. Tata Motors is the current market leader in the SUV segment with volumes of close to 3.5 lakh units of annual sales in CY22. For comparison, MSIL sold 1.48 lakh units SUVs in 2022. Tata Motors overtook South Korean rival Hyundai Motors to grab the pole position on a calendar year basis. MSIL's management agreed that the introduction of new products was delayed, but it said it has a firm plan for its first EV in the SUV segment scheduled to be released in FY24. MSIL will enter the already competitive electric vehicle market by launching an EV SUV named EVX in FY24. With high demand in both SUV and the EV segment, the company fast-tracked the launch by a whole year. The SUV is expected to be priced around 25 lakh rupees and will rival the likes of Tata Nexon EV, Hyundai Kona Electric, Mahindra XUV 400 and MG ZS EV. As a longer term plan, MSIL plans to release a total of 6 EVs by FY30, and this will take the ICE segment's powertrain ratio down to 60%. At the Auto Expo, MSIL also showcased a CNG version of Brezza, which is the second best selling model among compact SUVs after Tata Nexon. Notably, Brezza CNG does not have any rivals as of now, as other companies have yet to announce new offerings in this space. With all these plans ahead of the company, its revenue is projected to rise over 30% in FY23 and over 17% in FY24. Analysts believe MSIL's product mix shift towards the SUV segment will help the company to drive revenue growth in FY23 and FY24. And brokerages are also positive about the management's market share regaining ambition and a clear time frame for EV launches. But benefits from the EV segment can be reaped in the long term as the company will have to combat several challenges in the near term that could affect sales and manufacturing. As a result of all these plans, capex is expected to rise over 50% in FY23. Though MSIL does not have the first mover advantage in the EV space, it can learn from a company like Tata Motors and its challenges in the industry. Tata Motors' monthly volume has jumped several times year on year in FY23, but volumes remain flat QoQ, unlike in FY22. Manufacturing constraint and the chip shortage are not allowing the company to fill orders on time, despite an increase in demand. MSIL's management said that it has a firm plan to tackle challenges in the launch and sales of its EV that is to be launched in FY24. Let's have a look at what the street is expecting in terms of share price change in the next 12 months. MSIL has a share price upside potential ranging from 12% to 28%. Top brokerages have a positive outlook on the company because of its growth in the SUV segment in the coming year, with its PV market share rebounding with new product launches. Finally, let's move on to the valuation check part of the analysis. We can straight away see that MSIL's TTM-P ratio is lower than its historical levels and its sector. As a result, the company features in the PE buy zone. However, it is important to note that its PE is relatively higher at 35.6 and is also over its industry PE. So to take the earnings growth aspect into account, we can look at the PEG ratio. PEG ratio or PE to growth ratio is the company's PE ratio divided by the growth rate of its earnings. MSIL's PEG ratio is 0.3. A PEG ratio of 1 or lower suggests a stock could be fairly priced or even undervalued. So growth prospects may play a major role in the company's valuation. In fact, out of 42 analysts covering this company, 28 rate the company as a strong buy. During the Auto Expo that was held on January 12th, the managing director and CEO of MSIL said that the management was aiming to recapture the market share it lost through its two new SUVs that will be launched in March and May. The car maker is on the right track by focusing on high demand SUVs to drive top line, and MSIL's EV plan are for the long term and will impact the company after it launches a few EVs. It will now be interesting to see how MSIL will face challenges in this industry, both in terms of competition and supply chain constraints. So in this video, we looked into the financial performance, growth strategy, and risks of one of the India's biggest car makers, Maruti Suzuki. You can find more information about this company or any other listed company on trendlyne.com. This is Tejas signing off.